4 months or so, and it's called How I. Okay, and really bit by bit, I go over a few subjects and topics explaining how I got to understand certain things. And like I say, tonight's episode is called How I Came to Understand Price Action and brackets, of course, naked trading. Not suggesting that you trade with no clothes on in front of your laptop or your tablet, but again, it's not my place to say what you do in your private life, of course. But anyway, no, naked trading means actually something very different, which is what I will explain tonight. So tonight's agenda, first of all, we'll cover what is indeed price action. Then we'll talk about naked trading versus overly clothed trading. Then we talk a little bit about how to trade with price action, giving you some ideas, some areas of interest. And then we'll talk about future educational events coming up in the near future before the usual question and answer session at the end. So what is price action? Price action. I tell you what, let me put myself on camera so you can see me there as well. Hello everybody. Right. Price action is a method of trading where you actually trade off the price of an asset. Well, shouldn't we be doing that all the time, James? Yes, but there's so many things stops us from looking at that and forget all about the price. Now, unlike using many indicators, which a lot of people fall down to and use, price action, okay, basically tries to strip away all the noise, all the market noise, all the blinders, and actually you focus on what actual buyers and sellers are actually doing, where they're buying from and where they're selling from. Okay? Makes sense, because at the end of the day, that's what drives the market. The buyers and the sellers are really the engine behind the market. Now, price action is a little bit like this. Let's give you an example. Obviously, when we're watching the markets, we see the markets do this. We see the market go down, then rebound a little bit, then go back down again, then rebound a little bit, go down a little bit, up again, and then there we go. We'll start seeing our levels with our eyes of where the market has been selling from, and at the same time, where the market then sells from, and what then happens is the market then breaks up further, or like goes on a trend, sells off on a rebound before breaking forward and falling back again. Now, straight away, by looking at these areas, we can see areas of interest, i.e. areas where the market is selling from, and at the same time where the market is potentially buying from. And we can do all this using our naked eye. Now, one of the biggest mistakes, certainly those who are involved in technical analysis, they tend to make is they tend to overflood their chart with so many different things, okay, which I call a fully clothed chart. So, for example, you add your Bollinger Bands. Oh, very pretty, but straight away there's a lot of patterns, a lot of noise there. Then you chuck in your moving averages, exponential, maybe your moving average crossovers, again giving you more volume, more noise on your chart, more pretty pictures, so to speak. Then you add in maybe your Pambaric SAR indicator as well, nice pretty lines straight away, so your charts then getting flooded. Chuck in your RSI, your MACD, and before you know it, it's a very pretty Jason Pollock picture. Now, I will say I do not believe, for example, indicators don't have their place. Certain indicators very much do have their place, but my point of this is saying is when we use a fully clothed chart, we maybe are missing realistically what is happening in the market and where the buyers and sellers actually are. And here's a naked chart. Nothing on it. We have our candlestick charts, so we can see the open, close. We can see our wicks. But surprisingly, this naked chart is actually showing us a lot more than we actually think. If you look closely at it, we can see where the highs have been, where the sellers have been selling from. This is a 30-minute chart. So each candle, don't forget, represents 30 minutes. So straight away, we can see with our blind eye, where the high has been in those 30-minute sessions here and where they're selling from. At the same time, we can see a potential level of interest where people have been buying in, where traders have been buying in from. We can also see another high again, where the market is also been selling from. So going back on my chart, so straight away, this naked chart already telling us potentially where people have been buying in from, where people have been selling from and selling from again. But there's more to it as well. It's actually showing us a potential trend. Let me give you another example. I will in a second. Because naked trading is a method of trading based purely on price action, where the price goes to before people start to sell from, and where the price falls to before people go and start buying in again. Traders who trade this way, they use very few, if not any, indicators at all. Because at the end of the day, many indicators use price action anyway as part of their calculation. So it's in there, but by using too many, by using them too frequently, you're not training yourself to spot where the potential levels potentially are. So this method of trading does rely on yourself and yourself only, really, to identify price action and areas of interest. So let me show you an example. Okay, now this is the euro dollar, okay, on an hourly chart. Now, hourly. So we look at it with our naked eye, just our naked eye. I would ask the question, currently looking at this, is the euro dollar on an hourly rate on a downtrend? Now remember the rules of a trend, or any type of trend, uptrend or downtrend. Uptrend is 2 lower lows, 2 higher highs. Downtrend is 2 lower highs, 2 lower lows, at least. Now looking at it with our naked eye, can we see a potential trend here and areas of interest? Where the buyers have been buying in at and where the sellers have been selling in at. Let's have a look. First of all, let's see if the euro dollar is indeed on a downtrend. So there's the high. Remember, this is an hourly chart. There's a lower high. Okay. There's a lower low. There's a lower high. There's a lower low. Indicating to us that indeed, potentially, we're looking at a downtrend on the euro dollar. We're not having to use moving averages for this. We're not having to use the RSI or any lagging indicators. We can see this with our own eyes. Lower low. Then we have a movement which we can see in our own eyes there. Of course, it moves upwards. Like I say, nothing's perfect, nothing works forever. But however, this area here, does it break the previous lower high? Let's see. No, it doesn't. So again, it's a lower low, lower high. Lower high stays around, but still a lower high. Doesn't break that, so it still indicates to us it's a downtrend. Then we have another lower high, then another lower high, then another lower high, and at the same time, lower low, lower low. So again, with our naked eye, we can see the euro dollar on an hourly chart is indeed on a downtrend. Lower low there. So again, this potentially gives us where we're seeing the buyers actually buying in a little bit, but it's still a lower low potential area of interest. This again is indeed the euro dollar, and this is what again we can do on different time frames. It's a good thing about using price action. Okay, you can do it on any time frame. Daily chart. Again, is it on a downtrend? High, lower high. Oh, interesting range. We can see with our naked eye again. Indeed, this is a lower high from the lower high, but at the same time, at the moment, there's a bit of consolidation. So we know at this present moment of time where, at this period of time, the sellers are selling from, but where our area of interest is where the buying is from, making it ranging. But when it breaks the range, what does it do? Again, goes to a lower high, downtrend, lower low, downtrend. Again, we have a lower high here, but for that period of time, it then consolidates and trades between these two levels here, so we can see where the people are selling from and see where the traders are buying from. Then obviously then breaks. Initially breaks here, but then obviously comes back in the range. But here is our area of interest. It's the lower low, lower high, showing us a downtrend. Again, we're spotting this with our naked eye. So our area of interest are obviously this area here. Now, this is indeed the British pound. Again, this is on a 30-minute. Again, the 30-minute chart, boom, straight away with our naked eye, high, lower low, lower low, consolidation, stays around here, but then lower high, lower low, lower high, lower low. Let's see if it's right. Indeed, that's what we can see with our eye there. And at the same time, we can see an area of interest where it's consolidating, but now it's touching our lower low. So we now, though, it's still on a downtrend. And again, we don't need to use indicators to see this. We can see it purely for ourselves. And like I say, again, we can spot the consolidation periods as well. This is indeed gold. This is on a 15-minute chart. Like I say, any time frame can work. Got a 15-minute chart. Straight away, we see a possible consolidation period here where people are selling from, at the same time where people are buying from. But if we're looking for a trend at the same time, here we go. We got the high, we got the low, lower high, lower low, lower low, lower high, lower high, lower low, lower low, lower high. Again, with our naked eye, we can see what direction or what trend that asset is on. Same time, we can also see our areas in consolidation. And when we have areas in consolidation, don't forget, we're looking for the potential breakout. Now, this is the S&P 500. This is close up. This is a 30-minute chart. Straight away, we can see our areas of interest. We change it to a 30-minute chart. Areas of interest is still the same as the 15 minutes of interest. We can see our consolidation period where the buyers are selling and buying from, as well as the highs and the lows where the people are buying and selling from. We then move it obviously into a daily. We can then see obviously that if we go back on this chart, the current low, this is a 30-minute chart, current low does indeed coincide with a daily, with a low, which is there being tested or currently tested, which means this is a key area of interest because this is where in the past, when the S&P has been under pressure,